All right, this is week 44 outlook number 1. GBP, USD, USDJPY, NASDAQ, and the Nikkei. All right, let's get into GBP USD. Based off of previous price action, we are still inside of the discount of the range that we've been in for a long time now. I annotated this 4-hour sponsored candle that I was looking for, entry, yet to have taken it, and we've yet to solidify this local bearish price leg inside of this range, this bullish range. So we're just waiting at the moment. I'm really looking forward to this being mitigated and seeing if this is mitigated, what action will occur off of it. And remembering from the last outlook from Friday, I believe, or Wednesday, I said that there's possibility that if this were to continue lower, this would take out this low. And if that does take out this low, then that would shift our solidification point for this bearish price leg to this next high here. But we are still inside of this essentially bearish run. We've yet to solidify the leg. So we're just sitting on the sidelines waiting until price gives us an opportunity. Now, I will caveat that if you are, trading from scalp, intraday kinds of thing, there's tons of opportunities. There are tons of opportunities. What I am doing here is I'm giving you my overall swing biases, my swing outlooks, and that's how I'm essentially trading. Now, if I were to go down to intraday, scalp and stuff, there's tons of opportunities here. Don't get me wrong, like I'm saying there's not any opportunities. There are tons of opportunities on the scalp and intraday level, but because I'm looking for swing opportunities, I'm being I'm sticking to the macro perspective when I'm doing these outlooks. All right, so moving on to USDJPY. All right, we've actually got some more price action. It seems that as of right now, we're still inside of the bearish range. We still have our premium areas of interest that we have annotated, and we had the pullback into this essentially area right here, mitigating whatever inefficiency there was there, balancing, I guess, from these black candles pullback. That looks pretty balanced to me now. And specifically what I'm getting at is the fact that these black candles here and this push up, once price passed this last black candle right here, that created inefficient pricing once we crossed here. And so this pullback was to fill in that inefficient pricing. If I were to go, to say like the weekly or something, or like the 3-day, it should give us a little bit better, visualization of that, which exactly it does. And if we were to use the 3-day, this is what it would look like. Really, this was a price gap or area of interest, and it mitigated 50%. But because I'm looking at the daily, you have to kind of make those extrapolations unless you want to go up to the 3-day. And this would be the justification of that price action, of that analysis on the daily time frame. It's understanding that these bearish candles, everything below, everything inside of this bullish run here until we pass that bearish candle, this last bearish candle, is balanced. And so anything after that is unbalanced. And so price, understanding the principle of trading balance, price decided to retrace back into this price gap, this area of interest, and balance that, and then we're pushing higher. And that push higher actually led us to nearly breaking, I guess, this high here. And so that's what we're looking for, which is also justification for price action moving towards our areas of interest. We're inside of the premium, so we expect some sort of resistance as far as these wicks and stuff as we move deeper into the premium. But as of right now, we're just sitting on the sidelines waiting for price to push higher into our areas of interest. If it is to come back into the discount, there's still opportunities potentially, but as of right now, I don't see any opportunities on the discount side of the market. Everything is pretty much balanced, starting from this low, going up until here, and then we just balance the last part of the discount. So any pullback will be a pullback into basically equilibrium. And if it were to draw towards this low, I would want to see the liquidity grab rather than a break of structure. Why? Because a break of structure is a signal for a potential change in trend. Locally, we're talking locally at this moment because we are inside of a global range. So this would be a potential change of trend, as in moving deeper into the discount side again if we were to have a break of structure at this low. If we were to have a liquidity draw, then that's what I would see as a potential opportunity to push us higher, and it would be justified because we had moved back into the discount side of our range. But all that being said, I need to see price break this high first before any of that is valid for my analysis. All right, moving on to the NASDAQ. What the fuck? All right, never mind. What the heck? So I remember in the previous outlook that I said that there could have been opportunities inside of this wick. But let me back up. Did say that we transitioned back into a bullish range, or not a bullish range, a bullish run globally, so should still be looking for buying opportunities. Now, where I was a little bit off, but I wasn't really, pointing out any entries, was I said I should be looking inside of this wick. Now, that's all cool and all, but that's not really true, especially when I start doing some sort of refinement. And this is going to be like one of the only times I'm going to show what I'm talking about, because I've shown it plenty of times before, but in this outlook I'll show it. So what I mean by that is, after we broke this high right here ever so slightly, as you can see, that wick, price decided to pull back into this not only price gap, but specifically this candle here. Now, on the daily, it looks like this. But if we were to go down to the 4-hour time frame, this is what we're seeing, right? And in the previous outlook, I pointed out that this right here was a liquidity draw. And then I said that this was a potential sponsored candle, but that's not necessarily true. What's necessarily true is the fact that this wick mitigated that wick, and that's a price gap. This would be validated as a sponsored candle to me if it were to have uninterrupted price action and breaking this high right here. That would be my justification for calling it a sponsored candle. And so that's what I was seeing at the time, and I half-witted my analysis and said, hey, there's a sponsored candle here just based off of the engulfing and stuff, but I wasn't paying attention to the wick mitigation there, and I wasn't paying attention to the uninterrupted price action, as in we stalled here before taking out this local high. So because of that, that led me to going back and doing more analysis and seeing why did price react the way it did from where it did. Well, if we look at it from this perspective, there's a price gap existing from 100% of the price gap, or just like the open, to here. And then I always say that if our stop loss is going to be below the body of the first candle on the price gap, then really the range of the price gap is valid up until that point. And so seeing that price had already mitigated 50% and 100% was open, I just decided to go ahead and mark out this this black candle here. Now, because of that, and I'm gonna preface this, there's many ways to look at this. I'm only using the daily time frame, but you could justify this to being a sponsored candle if you were to look at other time frames, but I'm not gonna do that right now. Just understand the justification here on where I'm going with this. All right, so looking inside of this candle here by the green box, what I now could do is refine this area. And as I refine this area from the 4-hour, seeing that the price gap 100% was mitigated. So even if you would have, found entry or waited for refinement here, 100% is mitigated. Now you just wait for the transition if you wanted to do it that way, or if you wanted to be aggressive and just go ahead and enter and absorb any drawdown with your stop loss below this low, that's valid too. Or the other option, which is the third option, is to look inside of 100% up onto the stop loss region for this price gap, and then refine to see where an entry possibly resides based off of seeing where the inefficiency is. So going down to the 3-hour time frame, we're starting to get a little bit more resolution here. Now, I still want you to pay attention. To some of you, this may look like a sponsored candle. That's not true. It's still not a sponsored candle. Why? Because there's not uninterrupted price action breaking, this high here. Yeah, you could say it broke this here, but that's not the high that generated this low. This is pure uninterrupted price action from this high down to this low, All right. So now keeping moving on, 2 hour, 1 hour. All right. We're still getting a little bit more resolution. Nothing too clear. 30-minute, 20-minute. All right. We're starting to see something happen here. We see some sort of, price gap existing from the open of this candle to the high of that candle, and we see uninterrupted price action there. So that should be appealing to the eye. But notice that part of this price gap exists outside of the green box. So to me, qualitatively, that's, even it shows me that there's something there, but I don't want to use the 20-minute as my price gap. So then scroll down to the 15-minute, and lo and behold, what you end up seeing is that same existing uninterrupted price action breaking that high. Now, when I say that, you say, Brennan, why would you say that's uninterrupted price action, but the green candle stops here? Understand that this wick is a part of that. These wicks are a part of the break of that high here. If you have any questions on that, ask me, all right? But I'm not going to go deep into it. But 15-minute, you can see that this price gap exists inside of the green box. Mark it up from open to open, or open to, basically open to, or close to open here, between this green candles, 50%. And as we scroll, we see that's exactly where price mitigated. So this would have been the aggressive entry. Then it gives you, your secondary entries, if, based on whatever models you want to use. And then that's when we got the full move, taking out the high of the range, continuing the bullish run. And then we have the major gap up. So if you're holding this, which at this point, just hold everything. That's not financial advice. We're up here now, right? And that's over 1,000 pips swing from Wednesday of last week till today. And there's still more room to go. All right. So a lot to take in there, watch it multiple times. That was a little bit more in depth than what I wanted to do. But overall, summarizing TLDR, we're still bullish. All right. Now, lastly, the Nikkei, not going to go too deep into it. We're still bullish. All right, peace.